Alright, welcome back. This is going to be a trade recap slash full deep dive into the strategy, I guess. It's very mechanical. It's step by step. Not going to say bulletproof because you guys did actually see the loss that I took yesterday backtesting. In the backtesting video, we did take a loss which brought down our percentage, but I will be posting the next backtesting video right after this one, to be honest, but this will just be a trade recap of my win on GU. Wait, let's just get rid of gold because nothing actually on gold to go over. Yeah, this will be a trade recap on GU. Little 1 to 7, really nice. We love to see it. So yeah, if we just start off, I always start off on the higher time frames. So obviously on the 30-minute here, you can look at the 1 hour as well, I guess, but 1 hour is obviously just never going to be as clean when taking trades like this. We'll hop into replay mode as well. So this is what I was looking for. Right now we had session open where here. This was London Open. Let me label this. So this was London Open. You can see down here 5 PM. Obviously since we're in Sydney, I say this every video, but regardless, just helps you guys understand. So here on the 30-minute, we'll stay on the 30-minute. Coming into London session, we had this zone formed, right? So coming into London, automatic zone formation, that 3 candle step-by-step process, which I always like to go for. All this means, we'll just put the breaker structure here. So, going into the strategy. All my strategy is a lot of ICT people, traders, whatever, just call it an order block. But if it was an order block, they would always fail. It's as simple as that. It's like, let's try and find an example here. Why didn't this order block hold? Oh, it bounced a little bit, but no. It's because it's not the same as a demand zone. And I'm not just going off a little order block. I build narrative going into my trades, which I will go over. So one of these parts of the narrative, which I've come to find after hours of backtesting, is after my zone is formed, I need 1, 2, 3 candles formed. 1, that's fucking horrible. That's because I got the magnet on. Alright, so we've got 1, 2 candle, and 3 candle. As you can see here, 1, 2, 3. It's easy. Let's get that off the screen, grab this. 3 candles after zone formation. That's just a given, it's needed, simple as that. But anyways, this is just on the 30-minute. So on the 30-minute, 3 candles, and we cop the breaker structure. You don't necessarily need a breaker structure this clean within the next 3 candles, especially if you're taking trades off of the 5-minute. So if you look at the 5-minute, look, you got zone formed here. Obviously you got the 3 candles, but we didn't break on those 3 candles. So it's really not that deep. With the 3 candles, don't need to break the structure, but you do, however, need break of structure. So I guess if you're taking the 5-minute, you could say this was a little internal break, I guess, to the downside. But regardless, this, much cleaner. You want a higher time frame. Confirmation with a breaker structure. 30-minute, you can see, way cleaner. Anyways, coming down to the 15, this is what I take my trade off of, just to refine the zone a little bit more. So right here, actually, I took the trade off of my 5-minute zone, but regardless, the 15-minute zone is the cleanest that I saw, because it sat inside 1, 2, from the 5 PM open to 5:30 close. This is the 30-minute. Look. 30-minute. You can see what I'm putting together here. This is the 30-minute, but then I dropped into the 50-minute to grab this zone. Anyways, let's skip through on the 15. Actually, we'll go on to the 5 because it just makes it a lot cleaner. Well, I personally find that anyways. And this is the zone here. 5-minute, it's refined, much easier. Obviously, you can think it's a bit more greedy or whatever to take a zone like this. It's not. It's market knowledge. Regardless, really mechanical. Break of structure. Then, little bit. Oh look, little bit of inducement and liquidity. This is another thing that I use. We'll just mark it as inducement. Then we skip forward a little bit more. Obviously this ran straight through. Regardless of whether it runs straight through or not, it's causing, I'm not a support and resistance trader at all, but it's causing resistance. That's all that it needs to do. Slow price down a little bit before giving entry. Anyways, this is what I really liked. As soon as it formed this, before actually tapping us in, this little stutter, leaving liquidity above all of these orders, this is where I had the most amount of confidence. This is actually why I refined the zone. Here, we'll do inducement and liquidity. Just another little leg. This is why I ended up taking the 5 minute and refining it for a little more R&R. The main reason why I did that is because it provided such a good amount of liquidity. I talked about this really quickly and I went over it really quickly in my TikTok, which you guys can watch, but regardless, the more liquidity or inducement, whatever the fuck you want to call it, it doesn't really matter, left before a zone, the amount of conviction that can give you holds so much more power, so much more, because you just know that price is less likely going to sweep straight through your fucking zone. That's why you use the liquidity and inducement. Because for instance, say, let me try find an example. I don't know if I'm going to be able to find an example straight off the bat. Let's say this. Alright. Fuck off, wait, let me just come down here. So, say you want to take this. Actually, no, that's not a good example. Sorry. Disregard everything that I've said. Can we, like, really not? Oh, we're on the 5 minute. Fucking idiot. I'm really looking for this and I genuinely cannot find anything. That was the other trade. I guess you could say this. Yeah, this zone right here. So, you look at this zone. Obviously this is the refined. Boom, 1, 2, 3 candles. Gave a break of structure here on this before it reversed. But regardless, straight back up, straight through. It just ran through. You've got no liquidity sitting there. You might say, what about this? That is nowhere near significant enough. That's just a bit of consolidation there. That's nothing. Anyways, coming back into this, drop into the 5 minute again, just so it's a lot clearer. When you have these little bits of inducement and liquidity, all that is, this right here, is a build-up of orders. So, I'm sure you guys know what that means. It means people are placing their orders. In simple terms, someone is buying and they need someone else to sell to. Like, you need someone selling this. It's as simple as this. When someone wants to put a buy order in, they need someone to sell something to them. That's what this build-up is. A whole bunch of buy and sell orders, probably buy orders sat here, right? Because they want price to go up. It's a fight between buyers, sellers, buyers, sellers, buyers, sellers, right? Then buyers come up, sweep all the sellers, right? So now a lot of people, more people are selling than buying. So when this buy up comes up, all the sellers start to get stopped out because that's what forced it back down to consolidate here, right? Really, really strong push up. Consolidated because sell orders started to fill, correct? Sell orders were filling. So when the buyers keep coming up, because that's what this is right now, it's bullish, right? Then buyers start to come up. I hope this makes sense. Like, leave a comment if this doesn't make sense. I'll do a whole video in itself on liquidity. Buyers start to come out, stops them out here, right? And then it goes back to that one person needs to sell for one person to buy, correct? So these buyers are coming up, oh no, all the sellers are getting stopped out because people thought it's going to reverse from here, correct? That's why there was this consolidation. A lot of buyers, alright, sell off now. Now their stop orders, they might not necessarily be here, But regardless, there's plenty of orders here from people that are in sells or people that are in buys have their orders filled, their stop losses, whatever the fuck you want to call it, right? So buyers are coming up, and for buyers to get out, they need to sell, correct? And that's what's sitting all above here. For them to get out of buys, they need to sell. And that's why when price starts to come up, look, push past this price. Oh no, buyers are stopping, buyers are slowing down. Sell orders now have to be fucking filled, correct? I hope that simple explanation worked. But because the buyers started to get out of their positions, for a buyer to get out, they have to sell the market, correct? Because if you're in a buy, the only way to get out is to sell to someone. And this zone right here is where those orders are filled. And that's pretty much, that's also, what's it called? It's really strong in liquidity sweeps. That's why a lot of ICT traders, even myself, I like to use a liquidity sweep or equal lows. Because there's plenty of orders filled around there. It's good places to target. Because where most orders are and where liquidity lies in the market is where it'll move. It's as simple as that. That's why I use this as a huge confluence. Whether it's something as little as down here or down here, it's liquidity building up within the market. And it all comes back down to fucking newspaper trading back in 19 whoever knows, when trading first came out. For someone to buy, another person needs to sell to them. It's fucking Silk Road trading where it came from. So yeah, that's pretty much all it is. Orders need to be filled to get out of buys. They need to sell. Because, oh, it's pushing up, I want to sell now, I think it's going to go, and then sell orders filled on my zone. Then as you can see, come down. I actually, coming into here, this is just risk management that goes into when I'm trading. Obviously, we inverse this fair value gap. This is ICT sort of stuff. I still use it, no matter what. I still use ICT, but I went, what's it called? I don't trade ICT, but I use some of his concepts, sorry, just to clarify on that. So we inverse this fair value gap, showing sellers now in power of the market. When to break even though it's like, I could put it to this protected high, but regardless, doesn't matter. I ended up moving to break even. Then you can see we tap back in to the inverse, then start to deliver. Broke structure here. I think, actually yes, on this break of structure, I ended up moving my stop loss to this high, protected high here, just to obviously secure profits no matter what. And straight down. After this got formed, I ended up moving stop loss to here, just minimizing as much risk as possible. It's risk management, simple shit, guys. Delivered, win. It's as simple as that. Boom, here, sell zone, supply zone. Here, inverse fair value gap. That's where we went to break even. Delivered a little bit more, gave a breaker structure, moved my stop loss to here. So no matter what, I'm in a winning trade. Oh, look, we move further down, create another high here, fair value gap, come up, can't even test the fair value gap before coming down, so my stops are here. I think this was secured at a 1 to 2, or something like that. 1 or 2.5, sorry. Like, it's really simple shit. Trading should be simple. Trading should be boring with how simple it is. Like, I can't stress that enough. It's when you have a mechanical model like the one that I've built here, it is simple shit. Simple shit. And then we had New York Open here. So obviously that delivery towards TP was New York Open. That's why we got such a strong candle towards in our direction. And also why I tell you guys not to trade 15 minutes before, 15 minutes after New York Open. That's just from the knowledge that I've gained back testing. And trading, forward testing, real-time market. Regardless, this is practically my whole strategy out, just here for you guys to learn. Obviously, there's other things that come into play, like what knowledge do you have in the market, etc. but that'll just come with the more you do. And obviously, the further this channel goes on, gonna start giving you guys more and more information that you can start to use going into the market, that I use, that you might not have seen most supply and demand traders using. Obviously, can't leak all the source, but regardless, use these mechanics, and I promise you will start to see results. It's boring as fuck. It's boring, but it works. Trust me, it fucking works. So yeah, I'll see you guys in the next video that should be backtesting.